we're going to go ahead and get started. So looking at the S&P 500 on the left and the Nasdaq on the right, we're looking at the 4-hour time frame. As we can see here, once we left off on Wednesday, we wanted to see price continue lower, right? Taking out specific lows on the Dow and just continuing lower in general on the Nasdaq, but that was not the case, right? Price ended up trading back within the range and then just closed more so in a consolidation. So just like how we use stabilization, day to day, if price either one hits our target or two, the day just delivers lackluster, we can also do that for the week, right? Because some weeks are going to do exactly what you saw this week, where it looks very, very clean coming into the week, but the market just lays relatively flat, as you can see here. So how to approach coming into the following week, which would be next week, is we have a current range high and a current range low. And depending on how Monday trades, that'll tell us pretty much everything we need to know, gauging this range right here. So there's not really much to review, right? There's nothing high probability within here. I wouldn't want to tell you something after the fact in hindsight, trying to sound smart or trying to give you false information that even I didn't, anticipate to begin with. So, there's really nothing to talk about in terms of index futures since they just laid flat, but it's important to realize that this is our current range and this is what we are working within now. But whenever you have the index futures market lay flat or just act consolidative, low probability, etc., there is another asset class that tends to move relatively clean. And that asset class is Forex, which I probably should have taken all this off the chart. Forgot how to hide it. There we go. So Jacob, when do you really look at Forex? When do you care about Forex? Well, I look at it time to time, occasionally, but when am I more so interested in Forex? Well, as you guys know already, I primarily focus on index futures, right? I've said it many, many times over that this is really the only asset class that I trade. But whenever the index futures market is acting just like how you see here, where it's just stuck within the range, it's not going higher, it's not going lower, and there's really nothing presenting itself. There's no opportunity. You can come to the Forex market, right? As we can see here, looking at the US dollar, the Euro USD, and the pound. Price opened up on the week, traded higher, had an intra-week reversal, and has been continuing lower, ever since. So this is, ever since Monday on the euro and Tuesday on the pound, a trending market. These are the markets that we like to be in, the predictable ones, the ones where we want certain things to be respected, where we can identify the clear crack in correlations. So anytime the index market is causing troubles, right, just as you see here, that's when you can come over here to the Forex market and look for something to do over here. So I'll ask you guys, what do you see? Without any drawings on the chart, what can we dissect from viewing of how this week played out? Q1 low probability sequential SMT, then weekly cycle sequential SMT at the highs. Very, very good. Sequential SMT at the high. Very good. So now putting the drawings on the chart, right? We can see that coming into the week, right, the pound opened up and then took out Friday's low. So Monday, taking out Friday's low on the pound, and on the euro, we can see Monday failing to take out Friday's low, and on the dollar, Monday failing to take out Friday's high. And if you've never indulged into the Forex market before, the dollar is inversely correlated. So think about the chart being flipped, right? Which I believe we can do this. I've done it before. I forgot how to. Invert scale. There we go. And that was the wrong one. There we go. So if we invert the dollar, we can see it mirrors, the euro and the pound for anybody that's new to how Forex operates. So anytime you're doing analysis on the dollar or you're looking at the dollar, just imagine it flipped around. All right, so if the euro takes a high, then dollar should take a low. If dollar takes a high, then euro should take a low. Vice versa, right? So we can see that Q4 and Q1 sequential SMT, well, not Q4, but we'll go deeper into this. But we can see a Monday SMT occurred with Friday, right? And price expanded higher on the euro and the pound. Coming into Tuesday, what happened? What happened on Tuesday? A weekly cycle sequential SMT, but not any weekly cycle sequential SMT, a symmetrically timed high, bearish weekly cycle sequential SMT. So, as we can see here, this high was formed when? At 8 o'clock. On the euro, this high was formed when? On 8 o'clock. On the dollar, this low was formed when? On 8 o'clock. Now, what did I tell you guys about symmetrically timed SMTs? All right, what did I say about them? High probability. And is it required of a second stage? No, it's not. So, Kraken correlation forms, price drops lower, and then the following days, continue. But where did they go? To the previous weekly cycle sequential SMT right here. So this is something that I introduced last year, way early on into last year, but we'll talk about it again. If you have a sequential SMT occurring between Friday and Monday, or the afternoon session and Asia session, or just Q4 and Q1 in general, more times than not, these SMTs will fail, right? It even happened to us, right? We had this SMT highlighted. We wanted to see it work, but it just didn't. Right? More times than not, SMTs like this fail. But more in specific, the run really begins and gets started to target these SMTs during Q3. So, the SMT gets made in Q1, rolling into Q3. That's whenever the run, really starts and really begins. So does that make sense? So if you see an SMT between Q4 and Q1, or Friday and Monday, afternoon session, Asia session, so on and so forth, right? That is your telltale sign that later in the day, there's likely to be an intra-week reversal, or later in the quarter, there's likely to be an intra-week reversal. So does that make sense? And then we had the sequential SMT at the highs, agreeing with that, with symmetricality, and no second stage. Right? There doesn't need to be a second stage. But now we're going to look. Some of you might have noticed. What is this sitting here at the bottom? Did you forget to log out? So as we can see here, we're now looking at the Great British Pound futures. And if we look on a 6-hour chart, right, what did we say about the 6-hour time frame? If you have 6-hour time frame gaps, is that high probability? Yes. So after expanding, creating the sequential SMT, price leaves a 6-hour gap. Now the reason why I took this trade and entered, where I did, is to show you guys that you don't need to be in the highest echelon of a level, right? You don't need to be looking for perfection or this extreme precision, right? You can look for repeatable sequences like this over and over and over, and over again. Right? It doesn't matter where you enter within here. The only thing that matters, which, if you really want to take it the extra mile, is the further your entry is inside of a gap, all that means is the higher the risk to reward a trade is going to be. Right? That's all that is. You don't get extra points for, selling all the way up here. As we can see, price share lower, going right for the Q1 lows, which is where chunk of the trade is taken off. But now we can do some Q&A. Did you not enter on the daily cycle? No, enter on the gap, right? The very thing that I've been teaching for the past year is this right here. Like, this is literally the market. Is it possible if you could expand on stabilization? From what I know, it's when the weekly objective is hit. Yes, we can. Where was your stop? Right up here. But if you'll notice, if you look at the screenshot that I sent in the Forex chat, you'll see this is a different broker down here. So the reasoning of entering here was just to show you guys you don't have to get the highest echelon of an entry, right? You can enter right when price is tagging into the gap, and you're still good. And if you're confused by anything, if you're like, oh, I would have never been able to see this in real time, or how is he able to do this? In a few months from now, you'll be able to do the exact same thing. All right, there are guys in here and girls that trade this exact same thing, over and over and over again on the higher time frame. Since we had low probability sequential SMT at the lows, that means that we don't want to follow Monday's expansion profile, right? Exactly. And also, Monday's expansion profile is only prone to index futures. What point in the week would you swap to Forex? As soon as we saw Tuesday close as it did, that was our telltale sign. Why do you trade 6B instead of the regular USD? Because this is a futures broker, not a Forex broker. This is a question about TPDs. Sorry for putting cart before the horse. When there is sequential SMT attached to a TPD, does it make the whole sequence even higher probability? When either candle 3 sweeps candle 2 or candle 2 sweeps candle 1 for SMT creation, there were several times in the past 2 weeks where this would help navigate the week, even Friday. Yes. That's a part of TPD right there. And there's a whole sequence attached to that. But yes. Why do you chart on the Forex, CFD, and enter on the Forex futures? Are they the same price of the tick? They're not the exact same, but I prefer looking and charting on or from a Forex broker. To summarize that trade, Q4, Q1, weekly cycle target, symmetrical Q1, Q2 to reversal, 6-hour gap confirmation, confirms intent towards target, limit order on the gap, target Q4, Q1, sequential SMT, exactly. Well said. the range high and low are both symmetrical. Futures, if we're looking at restabilization, does the high and low need to be symmetrical? Like here in the case, no. So what you're doing now is combining two completely different concepts. Right? Restabilization is just identifying a range and waiting for the market to tip its hand for more information. So probabilities are on your side. That's all it is. It doesn't have anything to do with TPDs, symmetricality, none of that. Right? Sequential SMT doesn't matter. So coming into next week, you do profiling on both futures and Forex, or do you only when indices look bad? Only whenever indices are acting poor is whenever I look over at Forex. Are the symmetrical highs and lows looked through the hourly time frame only? So it doesn't matter what time frame you're looking at, right? The time a high prints is the time a high prints. If you're on 5 minute, 15 minute, 1 hour, 4 hour daily, right, you're going to see that same time. Time frame just encapsulates data into a block of time to make it easier to read. But the specific time a high or low got created, it doesn't matter the time frame. Right? Time frame just allows you to read that. So in Q1, if we get a sequential SMT with previous cycle Q4, later in the cycle, most likely Q3 that failed, sequential SMT will be the draw on liquidity. Yes. In TradingView, you entered to show us that all we need is a gap. With other broker, did you also enter at the gap as well? Yes, just higher into the gap. Why did you choose the pound over the euro? Because the pound showed a gap. The euro did not. I've heard somewhere about this before, where once futures consolidates, Forex expands and vice versa. The name was delayed trajectory. The true name is delayed expansion, and this was something brought by day, but it was looked at over a macro perspective, not, a week to week or a day to day kind of thing. This is classic Tuesday high of the week. Yep. Let me get back to that question on. Is it possible you could expand on stabilization? From what I know, it's whenever the weekly objective is hit. So stabilization, all right, I've said it before in the stream already, but stabilization is where you simply identify, number one, identify the range, right? That's all stabilization is. Now, why do you have to identify the range? Because you have to wait for more information. Right. What information are we waiting for? Are we looking for, the local news channel? Kraken correlation. Exactly. A side to be taken. So once we have the more information, then we have clarity. Clarity, right? So this is why we wait for restabilization. Now, when are you supposed to wait for restabilization? Number one, after a higher time frame target has been met and price closes in a, we'll say, higher time frame doji candle. Right? If you don't know what a doji candle is, just look it up. That's pretty much, taking a higher time frame target and then returning right back to the daily open. Number two, if price closes out in a consolidation, right? So if you're expecting speed and strength in delivery, and price closes out in a consolidation. What does this tell you? This tells you that yes, you still could be right, but all of that speed has now been taken out of the equation. So now your probabilities have drastically decreased. So when do you look for restabilization? Number one, after a higher time frame target has been met and price closes in a higher time frame doji candle, right? No, or number two, if price closes out in a consolidation. So unmet expectations. Then, if either of these two things happen, you go here, you identify the range, wait for more information, then you should have clarity. Right? And then the next time that one of these two rolls around, I'm trying to find it. There it is. Next time something like this rolls around, then you go right back to this. How do you choose valid key levels? Key levels that form as a byproduct of a cracking correlation. Is this linked with liquidity spread across the week and day? No, this is something on its own. Is there any importance or difference when two assets take the low, or if just one does that? No. We're building a very good foundation. Well, we're going a lot quicker than 2025 did. I'm getting all of the complicated stuff, all of the hard things out of the way. So we can just rinse and repeat over and over and over again. Come in every single week looking for the same thing, and then over time, you won't have to need me. Is that what you mean by gap alignment on X? The PD array is created after a true reversal. Yes. Never traded Forex, but you can't trade DXY? No. Cannot trade the dollar. Can you clear this up? Overthinking thought. If we go to a 1 minute chart and each asset printed a high 5 minutes apart from each other, isn't that asymmetrical? But if you went to the 1 hour chart, it'd be symmetrical. Yes, you would be correct. Here's the thing. Look at it like this. If you're trading the weekly range, would a 1 minute chart be important to you? No. If you were trading the weekly range, would a 5 minute chart be important to you? If you were trading the weekly range, would a 15 minute chart be important to you? Not really, exactly. What about a 1 hour chart? There you go. As a rough rule of thumb, we'll be looking for symmetrical highs and lows go like this. Monthly cycle 4 hour, weekly cycle 1 hour, daily cycle 15 minute, session cycle 5 minute, microcycle 1 minute, exactly. Yep. Can you go over today and speak of your POV? Well, like I said at the beginning, right, we didn't anticipate the market to draw higher and do what it did. So it would just be me going back in hindsight and looking at it through, the good old hindsight 2020 vision, which I don't think would honestly be that beneficial. Like I said, in the future, right, we're gonna have so many things that get called out ahead of time that you'll see happen with the very tools and concepts that we use. It's only week 2. We're transitioning into week 3. There's still many, many, many weeks where we are going to still talk about the same thing over and over again. And you're going to see it happen. You're going to see the market do things. And then slowly over time, you'll be able to anticipate it yourself. It's a new core content series going to cover some of the basics again. I was either thinking about releasing this weekend time frame alignment with everything or TPDs, the basics of TPDs. But I feel like time alignment might be more important. How do you know if the next candle will be bullish or bearish if a TPD is created? Yes, it is based on the narrative. Now, a question I have for you guys, especially the newer people, is again, it's only week 2, but how much stuff have you written down? How many notes have been taken? Tons of stuff, right? This stuff goes crazy deep. And this is still the easy stuff. This is the basics. But you have to understand all of this. The best way I can put it is think about it like a car. Right now you're building the base of a car. Right? What they say is the stock form of it. Right? But in the future, once we go deeper into things, you're going to understand how to change out the engine, put a sunroof in it if you want to, change out the exhaust, put new rims, new tires. You'll be able to customize the car. But firstly, you can't do any of that if you don't have a car. So right now you're molding and you're building the foundation and the core of everything. Kind of crazy, but I only have 1 page of notes, just a good memory. Yeah, I'm the same way. I'm the exact same way with a lot of the notes that I have with things that I've found or discovered in price. It's just a quick jot down of just a single word, and as soon as I read that word again, I understand a lot of something else. Will we be able to determine which stage of the market maker model we will be in? in alignment to QT. Yes, you will understand that. In the future, you will understand that. If you have a question about a concept, I have an answer to it. And probably something that I've formed together myself. Aren't you guys scared of possibly forgetting one day because you have one word, can't relearn it? No. See, like the z-axis, somebody put in the comment. As soon as you mentioned the z-axis, a whole plethora of ideas came to mind of how it works. Is there going to be any new kind of concept? Yes. All right, we have lots of things coming, but the most important thing right now is understanding sequential SMT, narrative, which yes, there's going to be a core concept video on that, right? If you're confused about anything, there's going to be a core content video in the future that simplifies it and makes it 10 times easier to understand. But right now, you're getting your feet wet, so you don't get caught off guard by it. And then in the future, you'll be like, oh, that's what he was talking about. Sequential SMTs and TPDs fail sometimes. I'm not a bad analyst. I'm just trying to get to the level of Louise where I barely lose. Here's the thing with that. And I'm not trying to call Louise out whenever I say this, but in order to see numbers like him, if you take inspiration from anybody that does big numbers, it's not just they just walked into trading and they were profitable and that was it, and they lost no money in the process. Louise, if you're comfortable with this, since I know you're in here, how much money have you spent on evals and combines? You've made lots of money, which I'm not going to say the exact number, but you've made a lot of money trading props. But how much was spent on the evals? So people can see the reality of it. Which I guess he left. He just left right before I said that. I'd say between 1K and 10K. I know the number, and I hope he doesn't get upset with me for saying this, but he's answered it on stream as well. And again, I'm not doing this to try to, get at him or anything. I just want you guys to see the reality of trading. If you want to do big numbers, then you have to be willing to lose relatively good sized numbers as well. But it's close to 10,000. So if you see somebody and you're like, oh, I'm taking inspiration from that, don't think that, they just walked out here and, instantly, boom, got it. No money lost in the process. And some people are extremely tolerant to that much risk. And that's part of why he is where he is. Right? He's the star student. We talk about him all the time. He's probably sick of it. But the reason why he is where he is because he doesn't care. But he doesn't care in a good way. He doesn't overcomplicate anything. He doesn't worry too much about, well, we have this here and we have this here, and I'm confused now on which direction I'm supposed to go to. What if it stops me out? What if it does this or that or that? He doesn't care, right? As soon as he sees something that the market suggests price should do one thing over another, boom, he's in it. And then, irregardless of the outcome, it doesn't matter. Now, are you going to have losing trades? Yes, absolutely. But he's where he is right now because of his mental. So instead of saying to yourself, I need to learn more technical concepts and get better at reading price. No, it's what's going on inside your own head. What's your take on the market for the next couple of months? Seems we're in a consolidation. We'll take it day by day and week by week for now. There's nothing really tipping its hand for forecasting the next few months. Are you going to talk about intraday trading, or will we fractalize your concept in order to go down on an intraday bias? We talk about intraday trading in the tape readings while price is actively printing. That's the intraday time. But apart from that, we do reviews, here and there about intraday, but it's mainly focused on the higher time frame. Profitability is a mindset, 100%. To apply your concept in general, yeah. Well, firstly, you have to learn it, right? There's a lot of things we haven't talked about. I always ask myself how I view trading. Back then, I used to say it's hard because of that, I subconsciously started to overcomplicate trading. Now, every time I trade, I do way less. It was a big mental block for me months till I finally said it's easy. Trading is the easiest, but the hardest thing to do in the world. It's very hard getting to the point of making it easy, but once it becomes easy, it's said and done. Hardest way to make easy money. Exactly. So, hope I didn't put too much on you guys in this live stream with all of this here. Right, but again, we'll keep on talking about the same things in case anybody's confused. And also, there's a questions tab. We'll see this one last one. Yeah, back then needed to know more and more. Yeah, that's a common characteristic, is the endless need for information. But once you find that level of consistency, once you find those things that you like, you won't go looking for anything else. And on top of that, you won't care what anybody else has to do. Right? You'll just be focused on yourself, what you got going on, and that's it. And that's exactly where you want to be. But anyways, with that being said, I'll speak with you all again Monday afternoon. Good luck and enjoy the rest of your weekend.